Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Modiwala. Very good afternoon to you, Vinny. And not that a great afternoon coming in for the benchmark indices. Remember, it was an all-crucial day. We were waiting for that MPC meet outcome, and it went as per script. We expected a pause in the rates, and that's exactly what happened. The MPC did not tinker with the rates. They maintained the accommodation stance, withdrawal accommodation stance as well. But what actually spooked the market was an announcement that came in from the RBI governor telling that imposing the banks to actually keep an incremental CRR. So that is what basically spooked the banking index. As you can see right now, it's gone back to the day's lowest point, be it IndusInd Bank, PNB or even SBI. All of them were succumbing under pressure today. Talking about the market setup then, for now, if you look at the advanced decline ratio, very much tilted in the favor of the decliners. As of now, you have the broader markets also that have caved in because the broader markets were holding on to positive territory at least an hour ago. But as you can see right now on your screen, if you see, the broader markets have also given up steam. You have the mid-cap index as well as the small-cap index, both of them in the negative territory in line with the benchmark indices. Talking about the sectoral performers then, and if you look at the sectoral performance, is the PSU Bank Index that is actually falling the most, almost a % downtick coming in for PSU Bank Index. FMCG, Pharma, Realty, all of them in the losing streak. But if you look at the media index, that one is holding strong, 0.8% uptick coming for media, as well as metals showing good strength in today's trading session. So that's the way how the market setup is looking like, reacting to what actually transpired out of the MPC policy meet, Vinny.
Absolutely. But on that note, let's get started with all the other stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. On the front of technicals, we have Swati Hotkar joining in with us this afternoon, while from the research team, we have Lisa as well as Ankita joining in with us. A very good afternoon to all three of you all, and good afternoon to you as well, Cheryl. As always, I'll be starting with the first stock that is in focus, and that is Sula Vineyards. This one is in focus on the back of its numbers. Good growth that they've seen coming in terms of the net profit of the company, a 24% growth in terms of the net profit. Their overall revenues of the company has seen an 18% growth as well. Margins have seen an improvement of around 200 basis points. That's the EBITDA margin, mainly led by the strong demand for the company. Even the footfalls in their vineyards are seeing an increase coming in as well. So that is surely an increase that they're seeing coming in over there, as well as the premium brands of theirs are doing quite well. The premium wines are doing well, and that is supporting whether you look at it in terms of the margins of the company or even when you look at it in terms of the growth of the company. That is seeing a good growth as well. So keeping an eye out on that one. But let's also listen into what the management of the company had to say in terms of their growth outlook. What are they seeing in terms of their own brands? We were joined by Rajiv Samant, the promoter, MD and CEO at Sula. Let's go across and listen in.
The Sula brand, which is by far India's strongest wine brand, plus our more premium Source range and Rasa range. That's really where this growth is coming from. We continue to move away from the imported spirits and wine segment and just concentrate on our own wines. So in terms of volume growth, it's probably something close to 15%, but the value growth for our own wines has zoomed past 20% growth, and that's really where the profits come from. We don't see any challenge at all. So in terms of the supply of grapes, Maharashtra is one of the biggest grape growing regions in the world actually, but of course they are all table grapes. But wherever table grapes can grow, there you can also grow wine grapes. And we have, table grape farmers lining up to plant wine grape for us. So that's on the supply side. In terms of our capex, in terms of our production capacity, last year we put in a huge new building which added something like 50% in terms of building capacity. And every year now we have the space in that building to continue to build out the tanks, the storage and fermentation tanks that we need in order to provide that growth. So absolutely no issues. And we have plenty of space left, plenty of land left at all our production facilities in Maharashtra and Karnataka for even future expansion.
All right, let's move on then and let's talk about another stock that is actually reacting to its earnings, and that's Car Trade, because Car Trade came out with its earnings a short while ago in today's trading session, and the stock after its earnings saw an uptick of as much as 8%. Right now the stock is given up some of those gains, 4% uptick that Car Trade is logging in trade. If you look at the consolidated net profit for Car Trade, it actually saw a 5-fold jump on a year-on-year basis. If you look at the revenue, also saw an uptick of about 4% on a year-on-year basis. If you compare it on a quarter-on-quarter basis, yes, you'll see some sort of a dip in the numbers. But if you look at a YOY basis, strong and healthy set of numbers coming in for car trade, post that 8% up move, hitting 1 month high, but now it's subdued in trade, or rather given up some of those gains, still trading higher by about 4% as we speak.
Okay, let's move on and talk about the first stock on the technicals, and that is Nava. Swati. On the charts, how is it looking like to you? What is the indication now you're picking up for this stock? Should we expect a run-up coming in here, Swati?
Yes, good afternoon all of you. Definitely Nava is really doing very well from the last few trading session. If you look towards the daily chart, the stock has given the breakout of the flat pattern, and the most interesting point is that on the monthly chart it is trading in the upward rising channel. I believe it has a very strong potential to reach up to 400 levels. Currently the recent all-time high which comes to around 396, and I believe that it likely to going to surpass that level, and 420 430 levels can be seen on the high side. So those who are having any long positions, they can definitely add on at the current level as well. I believe 360 will act as a crucial support level. As long as stock sustains above that level, upside rally 430 440 levels can be seen in the coming few trading sessions.
Alright, so that's the take coming in on Nava. But let's move on and let's talk about a new IPO that is underway, and also it will be hitting the bourses soon. We have Mr. Suresh Kumar, is the MD at All Cargo Terminals, joining us on the show. A very good afternoon to you, Mr. Kumar. Thank you so much for joining us on ET Now. And let's talk about what are the plans for your company post the listing. How has the demerger actually unlocked the value for you?
Thank you. Thank you for joining us today as we start a new journey in the All Cargo Terminals Limited avatar. Pursuant to the strategic demerger, which the All Cargo board had approved, supported by our investors, and then the NCLT cleared. So the whole process had taken time, and today we have listed. The rationale behind the demerger and the separate listing is something that we have spoken about in the past. Quickly to refresh, this offers All Cargo Terminals Limited strategic independence and financial flexibility to access resources that it requires for its growth plans.
Mr. Kumar, I just also want to understand, what are your plans to expand your footprint in India and the global markets as well? What is the strategy here?
So our priority is the Indian market. It is India's decade and in India's time to shine. Therefore, in the All Cargo Terminals portion of the business, our focus will be on expanding into the newer ports which are being set up. For example, I could tell you about Chennai, where we have a successful CFS facility which has been running since 2007. But in Chennai now, if you were to look at it, there are new ports which have come up closer to within the city, not within the city, out just in the outskirts of the city. But if you were to look at it, cargo movement is now split between the two port clusters, if I were to use that terminology, the erstwhile port and the new ports which are coming up in Kattupalli and Ennore. So we would be looking at opportunities to expand wherever there are new ports which are coming up and which show promise. And there are many of them across the country which are coming up. And we would like to extend our facilities into these regions.
Right, Mr. Kumar. Firstly, I stand corrected. Not IPO. It's just muscle memory, given the fact that we've had slew of IPOs off late. But I stand corrected on that particular front. But if you could tell us, what is the current capacity utilization for All Cargo Terminals? Any plans to expand your warehouse capacity? Also, if you have already planned on that particular front, then how many warehouses are you planning to add, at least in this calendar year?
So currently our yard capacity utilization across the 7 CFS facilities that we have would be in the range of about 80%, which is a healthy utilization level at this point in time. We operate within CFS ICDs close to 1 million square feet of warehousing. That's what we currently have. And in terms of expansion in future, it will be linked to the new CFSs that we launch, in which we will have additional warehouses and additional yard capacity. We are also looking at opportunities to expand the existing CFSs where we have, if we are able to access real estate adjacent to the facilities that we are currently in.
Right, and also, for All Cargo Logistics Groups is also planning over 1,000 crore of investments by its demerged subsidiaries. Now, All Cargo Terminal and Trans India Real Estate. How will the funds be utilized? What will be your areas of investment that you will be making?
So I would like to talk on behalf of All Cargo Terminals, and then the All Cargo Terminals business model that has been successfully created and that's been successfully running is based upon having the right assets and being asset light. What do I mean when I say that? We have most of the yard capacity through the leasing route. We have our equipments which we have leased out through long-term contracts, given the fact that we have scales by our presence across the country. Therefore, we operate with very, very less capex requirements, and we expect that to continue in the coming quarters. So expansion for us would be adding capacity, yard capacity through leased model, warehousing as much as possible to follow the same approach, equipments, which is a key component of what is required in running a successful CFS. We have a model of lease rentals, and even the transport that we have is through national contracts and contracts wherever possible with transport agencies or transport vendors who are able to give us the best rates. So if you were to look at the key cost elements of our business are all based on a lease model, which gives us flexibility and also choice, and which also keeps us asset light and are not hungry for a lot of capex.
All right, Mr. Kumar, we leave it there. Thank you so much for joining us on ET Now and talking about the way forward going ahead for all cargo terminals. And on that note, viewers, we'll slip into a break on this edition of Market Fatafat. When we come back, lots of stock to discuss. One of them is flashing on the bottom of the screen. We'll be back and talk about it. Watching Market Fatafat right here on ET Now. A lot of news flow surrounding earnings, but one of them that you are seeing on the bottom of the screen is regarding ethanol prices and what government sources have told via agencies that the government may look to hike price of ethanol by 1.5 to 2 rupees per litre. So on back of that, keep all these ethanol producers and companies that are in focus, like Praj also if you look at Global Spirits, and all of these companies also will be in focus on back of this particular development in the sugar companies as well. And what we are learning from government sources, from agencies that inform us that government may look to hike the price of ethanol by 1.5 to 2 rupees per litre. So watch out for these stocks on back of that.
That could be also in the next 2 to 3 weeks is the highlight that is coming.
Cabinet may approve it.
So let's keep an eye out on that one.
Yes,
for
absolutely.
Sure.
But there are a lot of earnings also that have hit actually over the last few minutes. One of them is Pidilite. If you look at Pidilite numbers, if you look at the consolidated profit, has seen an uptick of over 38% on a year-on-year basis. You also look at consolidated revenue, seeing an uptick of about 5.6% on a year-on-year basis. Margins also have substantially expanded on a year-on-year basis, 21.6% versus 17.1%. What will be crucial to know if the earnings have actually met the street estimates or no, because looking at the stock price, the stock is down, now trying to recover a tad bit, 2.3% lower is what Pidilite is trading at currently, Vinny.
Absolutely, surely keeping an eye out on that. But let's move on and talk about the next stock, that is CMS Infosystem. And Lisa, why is this one in focus today? Is this also an earnings candidate?
No, Vinny, it's on the back of a block deal. So CMS Infosystem is trading lower on the back of this, because around 3.2 crore shares, or around 21.6% of the stake has been sold, and the likely seller is the promoter entity. Way back in June also, the stock had seen a similar huge block deal where promoter Cyan Investments Holding, which is an affiliate of Baring Private Equity Asia, they offloaded around 13.8% stake at around it was worth around 680 crore, and the marquee investors who bought it, they were Abu Dhabi Investments, Norges Bank as well as Value One. So, as per the shareholding pattern, no other entity other than San Investments, they have a holding of around 48%. This is as per the latest shareholding pattern. And also in the last con call, the management did highlight that San Investment, the promoter entity, may go for a stake sale. So that is why we can see CMO Infosystem, the block deal happened, the shares got exchanged at around 364 per share, and that is the level that CMS Infosystem is currently trading at.
All right, that is CMS Infosystems for you. That is in focus on back of the huge block deal. But Ankita, coming to you, Thomas Cook, why is this one in focus today?
Cheryl, Thomas Cook is in focus today on the back of the stellar numbers that it posted. It is up in trade, at least more than 4% in trade. And it has posted some great numbers that, their revenue has seen an uptick of a good 46% on a sequential basis, coming in at 1,931 crores versus, 1,300 crores on a quarter-on-quarter basis. The EBITDA has also seen a massive uptick of 233% on a sequential basis, which is at 156 crores versus 46 crores in the last quarter. The margins are also up at 8% versus 3.5% in the last quarter. Now, if you look at the segmental revenues as well, the financial services revenues are also at 91 crores versus 65 crores on a sequential basis. Travel and related services revenues also up in this quarter, and so is the leisure, hospitality and resorts business revenue, which is up at 115 crores versus 84 crores on a quarter-on-quarter basis. Now, this kind of growth is primarily driven by foreign exchange and travel businesses. So talk about revenge travel, and here you can see it in the numbers for Thomas Cook clearly.
Okay, let's move on. And Swati, talking about Devyani Internationals, this one in the last 6 months has moved from those 140 levels to approximately, as of now, 196, 190 levels. What is the next target that one should actually keep an eye out on for Devyani Internationals now?
Yes, you have rightly pointed out that this stock has given a very good rally from onwards 140 levels to now, as of now, 196. Now, the interesting point is that on the technical front, the stock has given the golden crossover, which means that the 50 days moving average has crossed the 200-day moving averages. This is a very positive indication on the technical front. One more interesting observation on the monthly chart is that it has just formed the inverse head and shoulder pattern and on the verge of giving the breakout of 198 levels. Once it manages to give a closing above 198 levels, more momentum can be seen towards the 220 to 240 levels on the higher side. So those who are looking for any mid-cap counter, this is the very good counter. One can take a long position at the current market price. Stop loss can be kept at 184 for immediate target of 220.
Okay, let's move on and talk about Bata then on the back of its numbers. Nothing exciting coming in terms of numbers from the company. When you look at the revenue, just a 1.6% growth. The profits of the company that have also come in at 107 crores. So that has also seen a fall coming in and down by around 10.5% as well. There's a clear indication that discretionary spending, especially in the footwear front, the demand has remained subdued in the footwear sector, and the prolonged deceleration has started in the month of March, and that has continued even in Q2 is what the company highlighted as well. So clear pressure is coming in terms of overall the demand trends for Bata is what they are highlighting, and overall when you look at the margins of the company also, that has seen a slight bit of a contraction, 96 basis point contraction in terms of the EBITDA margin at 20%. Average selling price grew by just 3% over last year for the company, and demand has remained subdued is what the company is highlighting. So yes, keeping an eye out on Bata today, down and out in trade, almost at the day's lowest point.
All right, that is Bata for you. But Swati, let's talk about Hindalco. This one was an earnings candidate yesterday, but how are the charts looking for Hindalco to you?
Hindalco is really doing very well on the technical front. If you look towards the weekly chart, it's trading in the upward rising channel. Interesting point is that well placed above all the important moving averages, and I believe that once it manages to give the breakout of 470 levels, upside momentum can be go up to 480 to 490 levels. So long positions can be hold on, whereas on the downside, the immediate support is placed at 455 levels, which is supported by 20 DMA. So the view is definitely positive. We are looking for a target of 480 levels on the high side.
Alright, so that is the take coming in on Hindalco. But on that note, we slip into a break on this edition of Market Fatafat. More stocks on the other side. Don't go anywhere.